Hey everyone, welcome back to Corporate Decoder. Today, Goldman Sachs Private Credit Corp, or GSPC, filed a current report on Form 8K, and I am seeing a significant increase in their borrowing power. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing is all about a major credit facility getting a big upgrade, and it tells us something important about the company's strategy. So, what is this filing all about? Basically, Goldman Sachs Private Credit Corp, or GSPC for short, has amended a big loan agreement. Think of it like getting a bigger credit card limit, but for a very large corporation. The company involved here is Goldman Sachs Private Credit Corp. They are essentially in the business of lending money or providing financing. This filing is from one of their subsidiaries, specifically GS Private Credit SPV Public ILLC, which is a wholly owned part of the larger company. The agreement in question is called the BNPP Revolving Credit Facility. A revolving credit facility is like a credit line that a company can draw from, repay, and then draw from again. It is a flexible way for businesses to manage their short-term cash needs or fund ongoing operations. The bank involved here is BNP Paribas. Now, the big news happened on the 17th of April 2026. On this date, they signed what is called the Fourth Amendment to this credit agreement. An amendment is just a formal change or addition to an existing contract. So, what changed with this Fourth Amendment? The most significant change is that they increased the total amount of money they can borrow under this facility. It went from $1.1 billion up to $1.5 billion. That is an extra $400 million in borrowing capacity. This is a substantial increase, signaling that the company is planning to utilize more funds or wants the flexibility to do so. Another key change is the extension of when they can actually borrow money. Before, they could only borrow until the 31st of January 2027. Now, they have pushed that date all the way out to the 17th of April 2028. This means they have more time to access these funds. They also pushed back the final due date for the entire loan. It moved from the 1st of February 2028 to the 17th of April 2029. This gives them more time to pay back the money they borrow. Essentially, they have more runway not only to draw down funds, but also to repay them. Interestingly, they also managed to get a slightly better interest rate for a period. The margin applicable to advances is essentially a part of the interest rate that changes based on market conditions or the borrower's profile. It was reduced from 1.615% a year to 1.462% a year. This is a small but positive change, meaning borrowing will be a little cheaper for them, at least for the initial period. However, there is a catch. This lower rate is only for the time when the company can still reinvest its money. After that reinvestment period ends, the margin jumps up to a higher rate of 2.462% per annum. So while they secured more money in more time, borrowing becomes more expensive later on. This type of event, signing a significant loan agreement or amending one, falls under what is called a material definitive agreement. It is considered material because it involves substantial amounts of money and has a direct impact on the company's financial health and its ability to operate. This filing also touches on item 2.03, which deals with direct financial obligations. By increasing this credit line, they are creating a larger potential debt obligation for themselves. Even though it is a credit facility and not a fully drawn loan yet, the agreement itself represents a significant financial commitment. Finally, just like most filings, this includes interactive data files to make it easier for computers to read and process the information. This is standardized for regulatory purposes. Now let's talk about what this all means. By increasing their credit facility by $400 million, GSPC is sending a clear signal. They are either anticipating a need for more capital for new investments or acquisitions, or they are building a larger safety net to ensure they have ample liquidity. The extended borrowing and maturity dates suggest a longer-term strategy is in play, not just short-term financing. Think about it this way: if you suddenly increased your credit card limit by a few $1,000s and extended the payment due dates, it would likely mean you are planning for some larger expenses or want more flexibility in your spending over the next few years. For a company like GSPC, this is on a much larger scale. The company is a subsidiary of Goldman Sachs Private Credit Corp, which itself is part of the larger Goldman Sachs entity. This relationship provides it with significant resources and credibility. However, the specific details of what GSPC invests in or lends to are not detailed in this particular filing. What we do know is that they are actively managing their debt structure and accessing substantial capital. The fact that they secured a slightly lower initial interest rate is a small win, but the increase in the rate after the reinvestment period is something to watch. It suggests that the cost of capital might go up for them down the line, especially if the market environment changes or if their own financial performance deteriorates. This is similar to how personal loans can have introductory rates that jump up significantly after a promotional period. Overall, This filing is a positive sign of expansion and increased financial flexibility for Goldman Sachs Private Credit Corp. It shows confidence in their future needs and their ability to secure funding. However, the increased cost of borrowing later on is a point of caution to monitor. My biggest concern is understanding exactly how this additional capital will be deployed. Without knowing the specific investments or loans this facility will support, it is hard to judge the true impact on the company's long-term value or risk profile. What I am actually looking for are follow-up filings that detail the use of these newly available funds. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.